Hello, everyone. Welcome to another edition of Fintech News. Today's February 18th, and I'm your host, Nicolas Bellevaux.
I'm Pascal Onguinandal.
And today we'll be speaking about N26, which is exiting the UK, JPMorgan Chase, which plans to block fintechs to access their data by July, and a new Canadian stablecoin. So I'll kick it off right away with N26. So following Brexit, N26 wants to back out.
Yes, N26, it's one of the biggest neobank and their main competitor in Europe are Revolut. They decided to leave UK due to Brexit, but in reality I think it's more due to competition because Fintech in UK is starting to have a lot of competition. It's huge. To give you an example, in 2009, first half of 2009, 45%, we had 45% more of investment representing less than 3 billion pound. And you have a fintech player, but also traditional institution like Bank of Scotia. We develop an app and we put 100 million to develop this app to propose a better lending solution. And you see
they paid 100 million to develop the app itself?
Yes.
That's crazy.
It's crazy.
That's not a lean startup right there.
To develop the app and to promote the app, of course. I guess there is a lot of advertising and marketing costs,
sure.
And acquisition costs, but it's very interesting, you know. But what is interesting, it's number 26 it doesn't mean that they cancel their plan to go globally. They just penetrate US market with a partner who is also a neobank, and they are also present in 17 countries in European Union, and they want to develop more their market, and it's very interesting.
Okay, neat. Well, I'm curious to see how it plays out, especially considering Brexit with fintech in general. N26 is one of the largest players in Europe, but I'm sure this will have a ripple effect of other companies as well, reconsidering their options. And we spoke about it a bit, how also UK companies now moving more into the EU itself.
Yeah, definitely. And there is a couple of website, a fintech product, like for example, if you are owner of a account in Coinbase in European Union, you know, all these people who are using Coinbase receive letters that in few weeks it may change. And the users are waiting for our guidance, and they are negotiating an agreement. Coinbase are negotiating an agreement with the European bank based in European Union.
Sure, still a lot to figure out. It's all pretty recent news, so it's going to take some time to see. But all right, we'll see how it plays out. Next, here in the U.S., JPMorgan Chase, which is the largest bank in the U.S. by assets detained, is putting stricter regulation on fintech companies. So they want to block the access that third parties have to their users or their clients' information, namely for security reasons. But this is causing a lot of backlash in the fintech community because fintechs and data aggregators rely on this banking information to be able to provide their services and products to the end user. So JPMorgan is not categorically saying you can't access this data. They just want to impose stricter guidelines for how to do it. So blocking the fintech's ability to do screen scraping and using the client's password to access the account. They want to rather that the companies use JPMorgan's own API, but that would limit the amount of information the fintechs are able to access. So this just comes into the debate where fintechs and just the general consumers are saying that consumers should have the right to decide which third parties have access to their financial information, rather than the bank saying yes or no to which information a third party should or should not be able to access. So this comes all into the whole open banking debate, which in the US there's no open banking regulation as of yet. So it's a bit of the Wild West where banks and fintechs are trying to figure out where the correct middle ground is. But is this the right way of going? If it's to protect the data, sure. And I'm sure JPMorgan is doing this in a way to, in case there was ever a backlash against them because of a breach, they're trying to be more prepared for that scenario. But at the same time, it will limit or hinder the experience consumers have for the services, the fintechs they're already using, might lose some features potentially, because that data that the fintechs are getting is vital to be able to accomplish that their value proposition.
That's why every country, every regulator, every minister of finance should work on open banking. We should not let any institution to decide what we do with our data. It should be made by regulator. Like it was made in Europe, it's going in Europe, it was made in Asia, and it's coming to Canada. I hope that it will come soon in Canada, and it should be the same for US and any country in the world.
Speaking of which, we have our panel tomorrow. I feel that's a great segue. But we have our FinTech drinks tomorrow where we're speaking about exactly about this topic. So this might be an interesting thing also to discuss during that panel. But we have 4 amazing panelists from 2 financial institutions and 2 tech companies. So if we already have over 100 people coming, it should be a great evening. We have a little shameless plug for our evening tomorrow. And the last thing in the news, back here in Canada, Stablecoin was announced, which I'm pretty excited about. We mentioned it briefly, the possibility of a stablecoin coming to Canada, but we just learned that one has officially been announced.
Yes, definitely. It's a company called Canada Stable Corp. Canada Stable Corp is a joint venture of the fund manager 3iQ and the blockchain development company ManVet. They announced to create the first stablecoin to pledge $2 and it's very interesting because right now when you are trading crypto, you have some choice, but you have one choice, and the biggest one is Tether. It's a stablecoin in US dollars. But the problem of this stablecoin, it's they don't provide, they are not accepting to be audited. And
because they want it to be anonymous, right? Anonymized?
No, it's not about anonymity, but they don't want to prove that they have the amount of tethers they have. For example, 1 tether equal $1. If I don't remember the market cap of tether, but let's take an example. If it's 3 billion, they can't prove that they own physically 3 billion in fiat.
Right.
And it's a problem. And that's why it's good to have alternative. And what is good, if you don't know 3iQ will be the first fund in Bitcoin, and it's totally audited. It was audited by Raymond Chabot via their company, blockchain company Catalyxy, who's based in Montreal. And now they decided to create this stablecoin, and they guarantee that the amount of QCAD, they will have the same amount in Canadian dollar on their yes.
Okay.
On their bank account.
Wow. Okay.
And it will help a lot transfer of money between business, institutional.
Sure. When's it being rolled out? Can you already buy QCAD or not yet?
I check it on, apparently you can already buy. I check it on a bit, it's a OTC exchange.
Okay.
Website like Coinbase in Canada, and you can buy it.
Okay.
I saw that today. I saw that it was not possible yet, but apparently you can buy it. And what is good, you will be able to buy some funds from 3iQ in the next few weeks, months. It's planned in the next few months because they got the approval from OSC, the Ontario
Securities Committee.
Yes.
A fund from them?
They create their first Bitcoin fund, meaning that you will be able to invest with your Canadian dollar and buy some share of their fund, and it will be totally in Bitcoin. It's quite good if you invest in your RER for your retirement or your CELI Canadian product.
TFSA or RRSP. Okay,
Yeah.
Interesting. Well, that wraps up everything we wanted to cover in today's FinTech news. So thank you everybody for tuning in and joining us. Make sure you tune in next week, Tuesday at 3:30 p.m. for another episode. And if you want the French version, we'll be right back in about 5 minutes time for that. Thank you so much and have a great rest of your week.
Thank you very much. Bye.